Facebook. It'll take just a second, please. And I think we should be live on Facebook. Hi everybody, welcome to our weekly edition of the Strategic Swing Trader. I'm Sami Abusad, Director of Education at T3 Live. We have some exciting stuff to look at, so I'm not going to spend much time here, but I just want giving you an intro or anything like this, but I just want to say I have a double open house next week. If you'd like to check it out, totally free. You can get my Strategic Swing Trader newsletter in your inbox every morning at 8 a.m. And you can also participate with me during the day with the day trades for free for the next 5 days. So link is in the description. Before we get started, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure to agree to that. I'm going to go ahead and turn on the charts and basically go over the swing ideas for next week, but also go over the market. So I'm just turning on the charts. Forgot to do that before coming on the mic. So here we go. Okay, there we go. So as I said, double open house for next week. You get the Strategic Day Trader and the Strategic Swing Trader for free. Link is in the description. For today, for right now, we're going to do what we always do, which is give you, go over the market and then go over some amazing swing ideas, but with one caveat. First, from February 19th through March 23rd, I believe. Yep, from the high, February 19th through March 23rd, the market dropped, the Qs dropped 30%, 31 almost. The SPY dropped 35.5. Okay? From the high, February 19th to March 23rd. That's just over a month. The SPY dropped to 35%. The Qs has recovered. Get this. 70% of the drop. 70%. Or, in other words, it has rallied 31% off the lows. That's amazing. Retraced 70%. The SPY also rallied about 31% off the lows, but because of the initial drop being a little bit larger than the Qs, the SPY is still down on the year, whereas the Qs is actually up 1.5%. Can you believe it? Nobody's talking about this. The Qs is actually up on the year by 1.5, almost 1.5. You see, we closed 2019 right here. And right now, we're just above it. Okay? Just above where we closed at the end of last year. So the Qs is actually positive on the year. And for that reason, it's kind of hard to be initiating long positions. Okay? It's really hard because we're up so much. And so any kind of negative news and the market might gap down and start the pullback. So what I have done in the Strategic Swing Trader is I closed out of all my longs except for a couple of them. Guild, which we took half on Friday. I told you about Guild many times in these free videos. So you didn't even need to be part of the newsletter to get the Guild. Many times I mentioned it. Finally gapped up. We took half. I took half on Friday. Okay? At 87.17. Now we have a back half that we're looking to get to the prior all-time high, which is about 120. So that's a long-term play. The other open position is KALE, okay? And that's off to a good start. It's also a long-term position, so I'm not going to be, well, I can raise the stop already to 919. I'm not to 913. I'm not going to be managing it super tight because this is also a long-term position. Everything else I closed out of already. When did I close out of it? I closed out of the stuff on Thursday, not Friday, I think Thursday. Now Sage I meant to get on Friday, but this is beautiful. But it gapped just above my entry. If I had given it 10 more cents, I would have gotten filled. So Sage I actually meant to get because this is just breaking out on the daily chart, but it jumped above my entry by just a little bit and ran up 11%, 11.3 that day. It doesn't look like, let me show you, open up the chart, see the gap? So that opened just a little bit above my entry, unfortunately. And as I said, Sage ended the day up, I think, 11%. So that's that, but I only have two open positions. I had so many great swing plays, especially in oil stocks, even though USO, if you look at it, still at all-time lows. Oil stocks have not been dropping. Oil stocks, I mean, I have a list of 50 right here in front of me. There's only two that are down. Out of the 50 on Friday, DO, which we traded, by the way, on Friday, and ENBL. Those are out of the 50. Those are the only two that were down on Friday, because I have the watch list right in front of me. Now this was a swing play, pretty amazing. It popped 30% the first day. It popped 30% the second day. This was also played as a swing. It got to target 1, which was $4. Target 2, $5. It didn't get to, but I trailed out of it for a really nice play. So with that said, I just want to give you my view about the market with, since it's still bullish and it doesn't look like it's going to be climb-o. I did think this day was going to be the top. See this run up and the wide range bar, kind of a wide range bar here. I thought this was going to be the top. I was right for one day only, and then the next day, so market gap down, and then the day after that we cleared the highs and remained bullish. So what this move in the market to me signals is, one, the market is being irrational, right? Because nothing has been fixed. The damage to the economy has already been done. So why are we up 31% off the lows? Q's up 1% on the year, 1.5%. The SPY is also up 31% off the lows. So, of course, the IWM is showing a lot of relative weakness. But my point is, the market is either being irrational, which is rare. I would only consider it irrational when it goes climactic, right? In this case, that's not a climactic move. Or this is signaling that there's going to be a much quicker recovery to the COVID-19 pandemic than previously anticipated. Okay? To me, that's probably what the message here is that this is not like the financial crisis of 2008, that there's going to be a much quicker turnaround in the market, in the economy, than most people expect. That's what it's signaling. That's what it's saying to me. I could be wrong. I thought for sure this was the top a few days ago. I was wrong, right? So I could be wrong, but that's to me what the message is. Now, in terms of when do you turn bearish, I said this last week, I'm going to say it again today. If we break under a prior bar's low, that would be the first signal to be bearish. Now, we took out this was Monday, I think. We took out the previous bar's low. Did we continue lower? We didn't. So it doesn't mean that we're definitely going to sell off, but that's the first time, time, I guess, in place where you can start to think, okay, maybe we pull back. So that's what I'm going to do. It's also going to be, in this case, it's much better than last week, because if we break under Friday's low, it's going to be the break of the uptrend on the hourly chart. So here is my clear bias. If we take out Friday's low, I am going to turn bearish and start looking for the pullback, basically. I don't think it's going to be a collapse, but we will probably have a decent pullback to the 200 MA or maybe even to the rising 20. But the rising 20 is a short-term moving average. So it's going to catch up, and I'm thinking we might get a pullback to $200. Will it happen in 1 day, 2 days, 3 days, 5 days? I don't know. I don't think so. But that's what I'm going to look for, is if we take out Friday's low, I'm going to turn bearish on the market. Okay? SPY actually on the hourly chart, notice that if we take out Friday's low, it's still going to be above the moving average and above support. See that support, minor support on the SPY. So the SPY, it's going to be harder to turn bearish on. The SPY has a lot more room to go to the 200 MA, right? And if we take out Friday's low, we should drop, but we will have support at 280 on the hourly chart of the SPY. That's the gap fill. That's minor support. The SPY is a little tricky, but I'm telling you, if we take out Friday's low on the Qs, I just will have no choice but to turn bearish. And then anticipate a pullback maybe to the 200 MA. It's a very kind of tricky time in the market, but it's an amazing time, has been at least, to be a day trader and a swing trader, okay, because of the volatility. Okay, that's what's been really good about it. So we talked about the SPY, we talked about the Qs. The IWM is in a world of its own. Somebody told me last week that if you want to know how healthy or how well the domestic stocks are performing, the US stocks, then look no further than the IWM, because these are usually these are the small cap stocks, so they're not doing international business, they're mostly domestic, and they're not doing too well. Okay, the person my friend Josh that said this has a point, but so it has a good point, but I don't know that I believe that totally. I just go with the broader sector, which is the S&P or the Qs. Now the Qs is dominated by these tech stocks, obviously, and Amazon is on fire, Netflix is on fire, new all-time highs, right? Microsoft, biggest company by market cap, right? Apple number 2 actually. Apple is showing a reversal on the daily chart, so we might see some follow through. At any rate, back to, I'm going to talk about USO for a second and then go over the watch list for Monday. USO, while it probably did make a new low on Friday, I don't know if it did, I can check, but don't want to waste your time or my time, is at all-time lows. Notice the moving average starting to flatten out. So USO is probably not going to be, even if we did drop, because it's still bearish, even if we did drop on Monday or next week, it's not going to be a huge sell-off, because we have a flat 20 MA. When the 20 MA starts to flatten out, that means there's a slowing in the momentum, okay? It means the downside potential has subsided to some extent, probably. And I'm telling you, all the oil stocks, with the exception of DO and ENBL, I'm talking about the most liquid 50 oil stocks on my watch list, every single one of them was up on Friday. So oil stocks are not necessarily going with crude oil, with USO. They're rebounding nicely, and I tried to take advantage of them as much as I could. I did pretty well, really well in the last month with the swing trades. In fact, the swing trades are up $57,000, 57 Rs risk units. So if you risked 1,000, you'd be up about $57,000 for the year. If you'd like to check all of this stuff, by the way, all my swing plays for this year, the previous year, sign up for the open house. Link is in the description, and you'll have access to all of that. You can look at all my plays. You can also, you can spend the next 5 days with me in the day trading room. If the market comes in, that would create pretty good volatility. So, just check it out. And if you find benefit in today's video, I'm talking a little too much here, but if you're enjoying today's video and you're finding benefit in it, I would appreciate it if you would hit the like button right now. Hit the like button, please. All right. For next week, here's what I got setting up. We have a bunch of REITs, mortgage REITs. You see this? ACRE, pull back to the rising 20. That's a mortgage REIT. We have a bunch of oil stocks still. Cruise lines look on the upside. They look higher, even though the story is not compelling. The cruise lines actually look higher. What else do I have? I have some oil stocks that look okay. I have some biotechs that look good. So again, mortgage REITs, real estate stocks. A couple of the cruise lines look good. In fact, a couple of the airlines look good too, and Boeing looks good too. But Boeing I need a different entry on it. That's why it's not on the list. I have oil stocks look good. I have a few biotechs that look good. What else? We'll go over the list in a second, and then I'll go over the bearish list as well. So ACRE is a pullback to the rising 20. That's pretty good. So the entry for this would be over 763. Stop you could put under 7. Target the prior pivot high, which is around $10. So that's good reward to risk. You're going to see a lot of the same setups here. Therapeutics, so that's a biotech. Long, stop. Okay, not bad. AGRX, BGCP is a transition A on the daily chart. Same as the ACRE. Long over this bar's high, stop below it. CCL, notice the CCL on the daily chart. It's looking bullish. Unfortunately, the CCL did skip my order also on this day. I had a call on it in the newsletter to play it long. Stop right here. $12 was going to be my target one and reached it 2 days later, and it skipped my order. The entry was supposed to have been over 874, and it gapped, I think, to $9, 914 or so. So it gapped just above my order. With the volatility, you can take advantage if you know what you're doing, of course. Anybody that's not doing well right now, I'm just telling you the truth, and they call themselves a professional trader, they need to re-examine that. Because again, when you have volatility, if you know what you're doing, you should be doing well, because you're getting volatility. You see what I mean? So anybody that is not doing too well, when the market drops 30%, rallies 30%, there's something wrong. Okay? I did have one issue again with the swing plays, in that a lot of them would gap over my entry. So even though I did really well with the swing plays, we did really well in the strategic swing trader with the swing plays, we missed out on half of them still, because a lot of them would just gap over the entry with the market. The market has been gapping, slowed down recently, 3, 4, 5% every day. And so a lot of them gapped over the entry. So CCL missed the entry right here, but it still looks higher over the base. Okay, on CCL. I like it. CCO is a breakout. Not bad. Oil. No, I don't know if that's oil. Probably oil. I can look it up to see what sector it's in. This platform doesn't show me, but I'm opening TC2000 right now. So again, probably oil. I'm pretty sure it's oil, but I'll just double check. CCO. Oh no, it's not. See, advertising agency. And it said channel outdoor, so I thought maybe that's not. Anyways, CLNC is a real estate stock, same as the ACRX, ACRE, and the BGCP. Is a buy setup. ENLC is a oil, and it's a breakout. So transition A breakout. Okay? GPMT is real estate, and I actually like it more than the other real estate stocks, because you have a curvier 20 MA. See this? That's more, it's got more of an arch to it, curvy. So I like it more. IOVA is a really good breakout. The issue is, if you put the stop right here, then you wouldn't have enough reward to risk. If you put the stop here, you'd be pretty aggressive. So it just depends on how aggressive you want to be, but it looks higher. KLXE is a transition A on the daily chart, is an oil stock. I like a lot. It's a penny stock. Nice hourly chart also. So entry would be right here at 90 cents. Stop right here and target about 140. That's a healthy 50-cent move on about a 10-cent stop. That's like 5 to 1 almost. So I like a lot. KLXE. KOS is a transition A. This was a little painful because I was in it. I took it long and it gapped up 3 cents to target. 3 cents to target. But I didn't see it when it gapped at the open and I didn't get out. My target was 135. It got to 132. So I missed out on the KLXE. Otherwise, this was, you see, that was the resistance right here. So that's why it was my target. 135. I wish I had seen it. It would have been a nice winner. But instead, it wasn't a nice winner. It's now doing another transition A on the daily chart. Looks good. Looks good. MFA is mortgage REIT. Is not my favorite. But it's like the GPMT. Right? They're in the same group. MIT, same exact setup. Look at this. Is there a difference? Not really. Not really between the MIT and the MFA. MLND. MLND is different. It's a biotech, and what I like about it is we had the breakout already right here, and now we're having a pullback inside of that igniting wide range green bar. So I like it higher to $3 or so. So check it out on the hourly chart. This is the hourly chart. The entry for this would be over the base right here, stop under the base, and then target up here. That's a healthy 4-to-1 maybe, healthy reward to risk ratio. So I like it. I like the MLND. OSUR is on fire, and it has a 1, 2, 3. So entry would be over 1325 by 1272. SVC is another REIT, mortgage REIT, is a transition A on the daily chart. VLRS is an airline, and it looks higher over the base. I think it's the best airline in terms of the daily chart, probably the best setup. But there's some other airlines that look good, like AAL I think looks okay. UAL looks okay. I think DAL does not look good. It's the weak. LUV is probably the weakest right now, which is Southwest. Yeah, LUV is horrible. But the other ones, the AAL, DL is not the best. UAL look okay. And those are the major airlines. Let's take a look at JetBlue. Is okay too. Save is okay. That's Spirit Airlines. And then Hawaiian is actually the strongest after the VLRS. Now, VLRS is not a major airline. I've never even heard of it. But when it came up on my list when I was scanning, I noticed that it's an airline. So it looks higher over and it looks the best. Over the base, stop under it, target. There's a little bit of resistance at $6. That's 50% from 4. That's 50%. That would be a nice big pop. And then there's more resistance up here. So VLRS is an airline. And then last but not least is the VXRT. It looks higher. It reminds me of the CODX on the daily chart. See this? Same kind of idea. So VXRT, a little more sloppy for sure. Entry, stop, and target. Biggest issue with all these longs, and I have 30 more longs for you. I'm not kidding. I have at least another 30 items on my watch list, but I thought I'd share with you the ones that are most ready for Monday. The only issue is I'm worried about the timing with the market. I think it's really awfully late to be getting into long positions. I only have 2 open positions at the moment. I've had on average about 9, 10, maybe 8, but probably on average about 9 to 10 positions on the way up. Okay? 9 to 10. Last Friday when I did this video, I had 7 last Friday. So I've been having, 7, 8, 9, 10 positions overnight every day, and now I'm becoming a lot more careful. So that's the only issue with the longs. Otherwise, there's plenty on here that I really, really like and I think are good to go. But the timing of the market is bad. Now you might say, well, what about the shorts? Let's maybe go short as soon as the market triggers. Well. The shorts, I'm sorry to say, are not that good. The setups are not very good. CHK looks amazing, but it triggered on Friday already. So I missed the correct entry, which should have been under 1537. It already triggered, but it still looks good, lower. So I like the CHK lower, okay? DO, I know is a penny stock. The price of the stock does not matter. What matters is the pattern. When I scan TC2000, I don't even have a price requirement other than that I like the stocks to be above $1. But I scan for stocks that are above 1,000. I mean, Amazon comes up on my scan every night when I scan, even though it's a $2,000 stock. I don't mind whatever the price. I don't care what the price is. So DO is a low price stock, but it has a 1, 2, 3 short. Now, when they get really low like this, they might become hard to borrow on some platforms. But this is what I like about Interactive Brokers, is that they have everything available, just about, even 10-cent stocks available to short. But this looks lower, under 75 cents, stop over 92. It's a bearish 1, 2, 3 continuation pattern. Okay? Under 72 cents by 92, about a 20-cent stop. DOMO is an uptrending stock. I don't like to go against the trend. This is an uptrend. Unless the stock is climactic, that's the only time I go against the trend. But look at the hourly chart. It's got a breakdown. So I'm passing on it personally, but it's an idea. DOMO, short under the base. Stop right here. Look for a pullback to the gap fill. To here, basically. Okay. On the DOMO, GCI is another 90-cent stock. What can I say? I mean, the DOMO and GCI both look lower, even though they're penny stocks. Short, stop, and target would be the prior low. Target 1. Target low 2, just keep it and trail it. You can trail it bar by bar. And then VCRA is a 1, 2, 3, 4. So sort of. You know, you have the igniting bar and 2 resting bars, and then maybe a continuation on Monday. Lower target would be the prior low on the daily chart. So not a lot of, I mean, I have more bearish items that I'm looking at here, but these are kind of the best ones. You want to see the rest of the list? I'll show you the rest of the list. The longs, you don't need more. I already gave you like 20 at least, and I have 30 more, but you don't really need to. Oh, I guess I don't have more. Is that right? I have, hold on. Copied the wrong list. I guess I have, where's the rest of the list here? Oh yeah, here it is. Here is the rest of the list. Bearish items, if you want to just take a look at them, or save it for later. Here's the entire list, bearish list. I just gave you the ones that I think are most ready for Monday, but there's more. I always have more. CHK, we talked about it. DOMO, we talked about Eagle. The oil shippers, tankers, dropped a lot. This thing, I mean, rallied a lot. Look at FRO, doing well. Look at DHT. I mentioned them last Friday in the video. Last Friday's video, I mentioned the hourly base breakout. Remember that? I already mentioned them as long. Well, they did really well, but Eagle is at the lows, so this looks good too. The only thing I don't like about it is the flat 20. That's the only thing I don't like about it. Otherwise, looks good short under the base, stop over that doji bar. It actually looks a little tempting. GCI we talked about. HCSG is flat 20 also. I don't play, I don't enter into positions with flat 20 usually. Either rising to play long or declining to play short. And PFNGX is a 1, 2, 3, 4 short. RAD is a 1, 2, 3. 1, 2, 3 short. This is a base breakdown, but flat 20. TWI is at all-time lows, looks lower also. What's TWI? Let's take a look. It's farm and heavy construction machinery. And VCRA we already talked about. So these are additional items. Favorites from this list, I would say, would be the Eagle, EGLE. And KLA had a secondary offering on Thursday, and now it has a breakdown if it were to break under Thursday's low, so you can see it on the hourly chart base breakdown. So I gave you my entire bearish watch list for Monday. I didn't give you the entire bullish list, but that's plenty already. So I hope you're able to put some of these to use. Certainly that's my list personally, so I put it to use every day. Not gonna put it to use as much on Monday because I want to see what the market does. I think we're at potentially a turning point. But again, I hope you enjoyed this video. If you did, found benefit in it, please be sure to hit the like button. I'd appreciate it. And if you'd like to trade with me next week, feel free to check out the link and register. It only takes 1 click to register for next week's double open house. You get my swing plays, strategic swing trader, and my day trades if you decide to join me in the strategic day trader chat room. Okay, so that's for next week. For now, I want to say have a great rest of your weekend. Stay healthy, stay safe, and I will talk to you next time. Take care, everybody. Sami Abasad of T3 Live. I hope you have a great week next week. Take care, everybody.